Hi, my name is Michelle McLaren, and I welcome you to the ABCs of Health Insurance. I'm a licensed health insurance broker and counselor in the state of Texas, and I have my own agency, Just the Facts Insurance Agency. I'm here to help explain the confusion that is health insurance, especially for individuals. Insurance is evil. Let's turn evil into easy with answers. Today's letter is J. J stands for job-based insurance. Okay, yeah, that's normally called employer-based insurance or employer coverage, but I didn't know what else to put in the J slot. These plans cover about half of the United States population, and they have access to networks and policy options that are not available to individuals. If you have an employer coverage available to you, it's probably going to be your most financially prudent option because your employer is going to be paying at least half of your insurance premium. However, that's half of your insurance premium. They don't have any obligation to pay any of your dependents' insurance premium. So sometimes it's less expensive to go find an individual plan for your spouse or your children. One big exception here is if you have 3 or more children, the group plan's probably going to be a better option. They have a family rating instead of each person getting added on individually. One problem with finding individual coverage for dependents is that when job-based coverage is available, usually the tax credit then is not available for the rest of the family. The premiums for that family would have to increase more than 9% of the whole household income to be able to even consider getting a tax credit through the marketplace. This is called the family loophole. In my opinion, this is one of the worst problems with the ACA. When you leave a job, you have several options to ensure that you still have coverage, but you need to make sure that you're on top of that because you usually have about 60 days max to reach these options. For first of all, your premiums that are taken out of your paycheck and such are probably paid in advance for a month, so you should have coverage through the end of the month that you're dealing with when you leave or get asked to leave your job. Then you may have the option to continue on a COBRA plan. This is basically paying all of the premium for your group coverage and staying on that plan, usually for up to 18 months. Sometimes if you've retired from the company or a spouse has passed away, they may give you up to 36 months of COBRA coverage. But the employer's not paying any of the premium anymore, so this can get really expensive. Second option is get a new job that gets new coverage. Hey, that's a pretty easy solution. Not always as easy as we might like it to be. But even if you do find a new job with new health insurance, it might not start immediately. Many companies are giving a 90-day waiting period before they allow their new employees to have their health insurance. So for the interim, you can choose to take the COBRA plan, or you can choose a short-term medical plan. If you don't have any pre-existing conditions, that short-term medical plan is definitely going to be a less expensive option. Some companies even allow you to pay a lump sum for 60 or 90 days at less than a month at a time rate. It can save you a lot of money. If you're in a smaller company that you've moved to and they don't provide health insurance, you don't like the COBRA options, that's when you shop the individual marketplace. But you want to compare all the things that are different. For example, if you choose COBRA coverage because your doctors are in network, but discover you can't pay for it later, your choosing to cancel COBRA coverage is not a special enrollment period to get into an individual plan later. So you need to make sure all of your options have been reviewed before you sign up for COBRA. Compare those plans to the marketplace plans, the networks, the pricing, even how much of your current deductible you've spent for the year. Now, when you're exploring these plans, I've mentioned the networks. You've got to make sure your doctors are in network and don't assume they are. For example, if you had a Blue Cross group plan and you're going to buy a Blue Cross individual plan, this does not mean your doctors are in network. There could be completely different networks. I don't know why they've decided this is more efficient to have all these different networks throughout the state. I think there's 5 in the state of Texas, but they're not letting me run things. It's actually a big debate going on in our country right now as to whether or not employers should provide insurance as a benefit. It's only been happening since a little after World War II, and now it's usually expected. In fact, people will take or keep jobs that they don't otherwise feel drawn to because of the insurance. But think about it, that's a benefit. Maybe the company shouldn't have to provide that coverage to you. Insurance companies prefer to work with groups because there's more people to spread out the risk. If we had a national coverage, like Canada or many other countries in the world, then that would change the insurance industry. We'd have everybody in the same risk pool. But that would put those insurance companies out of business, and that's a pretty difficult thing to do in our society. What do you think the solution is to this issue? If you choose to answer, let me know whether you have group, individual coverage, or no coverage at all. I'd like to see what your opinion would be. I thank you for taking the time to listen to me today, and I hope you found this information helpful. Do you have other health insurance questions? Check out my other videos or leave your question in the comments. Education is so important. That's why I created Just the Facts Insurance Agency. It's just the facts you need to protect those you love. Peace and health to you all.